SpaceX compared to Tesla. I want to bring in Entrepreneur Shares LLC, their Chief Operating Officer, Ava Ottos. Ava, great seeing you. Fantastic looking dress. I love that color. All right, so let's talk about this for a moment because the private company valuation for this has been a no. Last June, SpaceX was $210 billion. By November, it's $255 billion. Last time they raised money, it was at $350 billion. This is in a 6-month period. This is not the highest value private company out there, and you still think it has room to the upside?
Yes, we do. We actually made it 12% of our portfolio in the crossover XOVR ETF, and we believe this is going to be the next Magnificent Seven, one of the future Magnificent Sevens. We have very high conviction. We think Tesla is about the past and SpaceX is about the future, and it's not just a rocket
Even with
company.
The robots and the robo-taxis?
Even with that, because this is not just a rocket company. This is key and core to America's security, national security. It's a key player. They allow for fast deployment when it comes to the rockets. Starlink allows for access and internet access to remote areas. That allows for tactical operations. This is not going anywhere. Tariffs come, tariffs go. SpaceX is not going anywhere.
When do they go public? Do you have an idea when they may be going public?
We do not, and I can't disclose like what we believe because it might not be true. But we believe that where we got it, at the $350 billion valuation, we believe that it still has room to go future. So.
What's the symbol for the ETF that you buy that in again?
So we bought it in crossover, the XOVR ETF.
XOVR.
Yes,
okay.
XOVR, and we do own Tesla too, but that is an underweight, and that's for purpose. We believe that Tesla, you see, 40% decline in Europe when it comes to the sales. Some countries in Europe have a 70% decline, but they do have the robo-taxis and they do have Optimus. So there's good things. It's still a good story, but we believe SpaceX is going to be the future.
Elon kind of going back to full-time work that should help as well, right? The stock.
Yes, exactly. So he's going to be still linked to the Doge, which again helps SpaceX because they got 40% of the US-based contracts, and we think there's going to be more of this. But they do have, I think this is going to help both XAI and SpaceX and Tesla.
Let's talk about the juggernaut, the best performing stock last year. I think it was up like 700%, app loving. Then all of a sudden, you had at least 3 hit jobs on this, right? At least 3. But the irony is, every week I see at least one Wall Street firm put a target on a buy recommendation on it. So Wall Street firms will love it. The shorters hate it, and they've written out a lot of reports. But the momentum is against the stock, although it's having a good day today. Would it be a good entry point here right now, or should someone still wait maybe for the next earnings report?
So we hold it. We're not buying more, but we do.
Still written out a lot of reports, but the momentum is against the stock, although it's having a good day today. Would it be a good entry point here right now, or should someone still wait maybe for the next earnings report?
So we hold it. We're not buying more, but we do hold it. We're buying other companies that we believe are better in this environment, but it is one of our top weights. It used to be our top 1 weight, as you know, in the last 2 years. But since December, SpaceX is by far our biggest weight.
By the way, I just want to let the audience know the average target on that app loving is 443. That's 200 points higher than where it is right now. So, I mean, if these shorts are wrong, and I think they're wrong, there could be a huge grand slam. Let's just real quick before I let you go, because I know you're watching. You also like Netflix and Google here.
Yes, for sure. So Netflix, as you saw year to date, is one of the winners. Even though the market is down, Netflix is doing great. I think there's a reason for this. And in our last rebalance, we added Netflix to XOVR. The reason is that in uncertain environments, when people are afraid of the likelihood of a recession, they choose Netflix for their online entertainment. This is a very inexpensive way to entertain a family. So this is why we like it from a fundamental point of view too. Its revenue growth is 5 times its peers, and its EBIT margin is 4 times its peers, so it looks great. And Google, I think it's on a discount. It's like going to Macy's after Christmas.
Are you worried about AI taking over search?
No, I don't. I think they are very well diversified. They own everything, really. And from a valuation point of view, it looks great on an enterprise value to market cap. It's half its peers, so it's on a discount, the way I see it.
All right, great stuff.
Nice to see you.
Nice seeing you always.